And joining me now is the Chief Investment Officer of CCLA, which manages money for charities and churches, including the Anglican Church, and he's James Bevan. James, thank you so much for joining us today. Now, there have been some scandals in the past where we had, for example, an outcry from the Archbishop of Canterbury saying, well, we shouldn't short sell bank lendings, and then we saw them implicated in it. So exactly how ethical, first of all, do they want, or do they ask you, their investments to be?
Well, it's very clear that the Church has high regard for Christian principles relating to mission and witness, and it's really important, of course, to ensure that if you are investing money, that it is consistent with the overall objectives that you have, either for your own money or for that of the organisation that you represent. And I think that in describing his dislike for short-selling, the Archbishop was attempting to draw attention to the very manifest excesses that were present in the banking system. We all know that the consequences of the unbridled problems the banking sector had for the rest of the global community. And when one therefore thinks more broadly about ethics, I think it's really important to remember, first of all, governance.
But James, they themselves were actually taking part in the short selling through investments that maybe they didn't know about, but they themselves, whilst outcrying the fact that we shouldn't be doing this, were doing it.
This was a question not of absolutes, but a question of measure. I mean, for example, you take the Church's view on armaments. The Church has a very clear view on armaments. It doesn't want cluster bombs, it doesn't want landmines, and I think that is a very clear and appropriate philosophy. To say, however, the Church wants to distance itself from all engineering companies that are associated with all armaments activities, absolutely not so.
So what exactly is it asking you to invest? What are you, for example, be buying for the Church?
Well, do you know, it's very interesting. The whole ethical debate seems to be very much focused on what one can't do. And actually, the Church is much more interested in what we can do, what we ought to be doing actively in promoting better standards. So one of the big things the Church is very keen on is engagement. It wants us to go and talk to companies to get outcomes that are consistent with a better world.
James, I also want to move it along to really the big focus, sovereign debt, Greece, now Italy also being implicated. Are we going to see a contagion and a lot more markets being hit by this fear out there on the markets?
I think there is a real risk that the global markets now begin to focus much more on risk and the appetite to reduce risk. And therefore, very interestingly, we're seeing a reduction in yield just at the time when people are beginning to talk about tightening. That, I think, means that we actually get a better buying opportunity for equities and a better selling opportunity for debt, because I do think that the long-term reflation story is still in place.
So you don't believe that there's going to be a worldwide correction of the equity markets in the next couple of months, but that it's just a blip?
I think that if there is a correction, it's a buying opportunity, because I see lots of companies with strong free cash flow yields, sound balance sheets, robust business propositions, which are currently cheaply priced.
Specific sectors that you'd be buying into?
Well, I'd be looking at US engineering companies. I see GE, I see Honeywell as companies that are really very lowly priced in terms of their global cash flow. Over here, I look at companies like Reckitt as a company that had a fabulous 2009, and yet the market's not prepared to accord it a valuation consistent with its long-term growth credentials.
So what exactly is looking expensive at the moment, something that you actually wouldn't touch?
Well, I think European cyclicals are looking quite dangerous at the moment. Europe, in aggregate, at the corporate level, is still cash flow negative, and therefore I think that we need to be very careful about companies that have high leverage on balance sheet.
James, great to speak to you. Thank you so much. James Bevan there from CCLA.